This daily market update has been brought to you by Daily Wealth Report. Trading involves risk of loss and may not be suitable for you. Past performance is no guarantee or reliable indication of future results. All advice and education content is of the nature of general information only and must not in any way be construed or relied upon as legal, financial or personal advice.
Good morning, traders and investors. It's Thursday the 9th of August and we've seen some mixed activity in Europe and the US overnight. Some negativity starting off the day in most of the leading European markets, but finding recovery through the later parts of the session. As we have a look at the FTSE, it does look like a positive day turning out for Wednesday, middle of the week, but we can see that it had opened lower and then spent the remainder of the session recovering. What this does show us, though, is a slowing buyer momentum. So as a strong push had occurred on Friday, that certainty behind the buys isn't as strong, hasn't got as strong a conviction as it had from that Friday session. The FTSE closed up 4.6 points, or 0.08% at 5845, so just a mild movement there. The German DAX actually ended lower, closed down 1.8 points, virtually unchanged, but 0.03% at 6966, so it shows a little bit more weakness than what the FTSE had shown. Whilst the French CAC 40 showed a little bit more selling pressure there, however, closing down only 15 points, or 0.4% at 3438. As we had noted yesterday, it had been rallying much stronger than its European cousins had been in the previous session, so a little bit more selling pressure there. It has formed a hanging man candlestick at the top of this rally here, which is a sign of weakness and can at times be can determine a pivot point. So what we need to see is some sort of bearish candle there to determine a reversal point forming. It's also formed as an inside day to the previous candle, so greater signs of weakness there on the French markets rather than the German and the UK. As we take a look at the US markets, the Dow Jones had closed 7 points up. That's virtually unchanged. It's only 0.05% at 13,175. We can see again, following Friday's strong push, there's been a little bit of uncertainty, a bit of weakness there. We had noted yesterday that we have a resistance level up here at 13,300. So there's a high probability that we are going to find some weakness in around these levels here. A possible pullback towards the red line here, which is a 20-day moving average, and if that occurs, then we could be looking for a higher low for a continuation of the trend. But at the moment, the strength behind the buyers is not very strong at all. The Nasdaq actually closed down on the day. It had gapped down early in the session, recovered, hence the reason why it is a green candle there, but it was down 4.6 points, or 0.15%, closing at 3,011. It too showing just some weakness at the top of that movement. And then the S&P 500 index had closed 0.87 of a point up, so it's virtually unchanged at 1402. The early negativity in the US markets had set the VIX index up on open. It had gapped up quite extensively, but spent the remainder of the session retracing. By mid-morning, just before lunch, it had turned negative and it continued trending down. It lost 67 cents for the day, or down 4%. It has formed a bearish engulfing pattern, which usually we would see that type of pattern at the top of a movement, and as it's approaching its support base here, it appears to be attempting to force to a new low, trading down towards where it had reached in March and April. So not a lot of volatility in the markets at the moment, which suggests there isn't a great deal of fear on the short term that the markets are going to be retracing. So unless we start to see this VIX really starting to pop up, at the moment there is a lack of real fear in the markets. People seem to be quite confident. As we take it back to the ASX market, we can see that there was an upwards day on Wednesday. The ASX 200 gained 22 points, closing at 4313. It was a nice little shift upwards, continuing that rally that had seen it break through the resistance that had formed through here. A little bit of a sell-off towards the end of the session, however, a continuation of the trend for the time being. The SPY futures are pointing to a slightly higher open, but it's barely an upward shift as it is, though. It's only up 7 points, so we are expecting some sort of mild activity on the ASX 200 to be moving upwards early in the session. But at this point in time, we would expect that the markets are probably going to be a little bit subdued, certainly ahead of the unemployment report scheduled today at 11:30 for the Australian market, and ahead of Chinese economic data with the CPI, PPI. And then later this afternoon we have the fixed asset investment and industrial production and retail sales out of China as well. So with all eyes on China at the moment, we're not expecting a great deal of volatility in the Australian markets in the early parts of the day. That's our summary for Thursday the 9th of August. We hope that gives you a bit of an insight into what's happening right now, and we look forward to giving you an update again tomorrow.